Hello, hello. So, good evening, everyone. Happy Saturday, and I hope all of you are safe and healthy. So, welcome once again. So, we are actually on our fifth episode of the revenue stream, right? So, if you've been with me since the start of the year, we've actually introduced this whole new sub playlist, sub channel within the Peso Pro episodes where we talk about all of the different aspects of personal finance. And this evening, we're in for a very, very good treat. We're actually gonna talk about maybe one of the most important technology changes in the last few years, maybe, but really, really one of the most discussed topics in personal finance, especially in the last few weeks. If you follow the crypto space, the last few weeks are have been a roller coaster ride. So let's actually take time and really take a step back and understand what's the technology behind crypto and ano ba talaga siya. Because I know for a lot of people, we actually know what their names are, but we don't really have a clear understanding yet of what cryptos are for and what they're all about. So that's what we're gonna talk about today. So just before we start, this is my typical logistics slide. So for every one of you who are new here, we utilize YouTube's chat function. So you would already have that on, if you're on a laptop, you would have that on the right side. If you are on a mobile device like a phone or a tablet, typically this is at the bottom part. I see a lot of you have been putting in messages, so I know you found the chat. So please find that chat wherever it is in your device, because we're gonna use that as the one source of interaction between you, me, and our guest. Also, while you're here, please do hit like and hit the subscribe button so that you are able to see future videos that I put up. Okay, so without further ado, let me introduce to you our guest. And you've seen his name, you've seen his face in the posts on social media, but let me just introduce to you. So we are very, very fortunate to have our guest with us this evening. So we have Kyle Kua. Kyle is the current Chief Operating Officer and also as the Chief Financial Officer of PDAX, or the Philippine Digital Asset Exchange. Kyle is a fellow CPA, and he actually graduated from the University of the Philippines. And I want to all of you to actually try to ready your questions, because Kyle has been doing crypto and blockchain technology for quite some time now, even at his very young age. So I'm very, very excited to have him on board. So without further ado, let us welcome Kyle. Hi, Kyle. Good evening.
Hey Philip, good evening. It's nice to
Hi.
be here.
Welcome, and thank you again for saying yes and joining me on the stream. And I hope this will become a very, very fun and exciting evening. I know we talked this a few days ago on what are the common questions. So hopefully you enjoyed this as much as I do, and also our audience.
Alright. Thanks for the privilege. It'll be a fun night, I hope.
Yes, okay, so let's make it fun night. And well, speaking of fun, you would have on the screen actually the links to our draw. So if you've seen the latest posts that I made, we are actually giving up until like the biggest prize, about 1,000 pesos worth of Bitcoin credits, or actually Bitcoin in the PDAX app. So if you are interested in joining that draw, we'll open the link for majority of the stream, and we'll do a raffle draw towards the end. So the link is down here. You can either go to that very short link, so bit.ly/crypto one-on-one draw, or if you have a mobile phone, you can scan the QR code, enter a few details. We just need that so that we know how to contact you if you actually won. Right? So without further ado, let's maybe Kyle, I'll set it up, and then we get into the meat of the discussion. So
Sure.
today, our topic is all about Crypto 101. And what Kyle and I wanted to achieve in this session is really, really, aside from asking kailan ba ako bibili, ano ba yung kikitain ko dito sa crypto na to, what we really wanted to do is really take maybe 10 steps back and really see what crypto and blockchain are for their technology. And I am very privileged to have Kyle explain that to all of us. So, Kyle, I'll bring up our slides and I'll let you lead the discussion.
Mhm. Sure, Philip. So over the next 80 minutes or so now, we talk about cryptocurrency, but more than that, we'll also talk about blockchain and digital assets. We've have some slides in the screen now, but likely this will just take around half an hour, and we'll spend a lot of time, going deeper into the questions. And that's where it gets more interesting.
Yes.
And through this, let's sort of have the foundation of, what blockchain is and what cryptocurrencies are. Before I start, let me share something pretty quick. Right? Whenever it comes to do with people attending talks, I've realized like when you go to a talk or when you yourself attend or give a talk, you always see like three types of people in the room. Let's call them like the okay, the good, and the great, right? The okay are there, might be for a different reason. Could be just because they're supporting one of us, or because they have nothing else to do, not really to learn. The good come to learn, right? And the great come to learn, but they take something from the talk and apply it. So my challenge to everyone here in this call or in this webinar is to find something that nugget of information or wisdom that you might want to apply on, that you might execute on. It could be just one, right? It doesn't need to be like 10. And work on it. And that will make all the difference. Yeah. So as we move on to the slides now, setup. Thanks, Philip. We'll be talking about digital assets and how it is the future of investing. And let me preface this talk with just some disclaimers. It's not a talk on or a discussion on um, cryptocurrencies and how to avoid losses through like technical analysis and on putting stop losses. It's not a talk about PDAX, but it is a talk about blockchain and what are the fundamentals about it and how does it differ from what we know about traditional assets. And let me share you some use cases, right? You see these three logos on the screen, and let's talk about each one very quickly. Right. So here's some like apps, right? We have an app called Price Lock, and all of these three in the Philippines, by the way. We have this app called Price Lock, where you can actually purchase oil, right? And be able to hold it in your mobile wallet or on your mobile phone for future consumption. Wherein 1 liter of oil, whether it's unleaded gas or diesel, is equal to one digital token. This was created, last year, launched last year by Sea and together with PDAX, being the technology provider. Uh, and the purpose was very straightforward, right? How do we invest in oil even beyond how much the tank of our car is? Very interesting. So now you can purchase like up to 100 liters or even more. You don't need to just full tank your car if you know prices are going up. We also have other use cases like Bonds PH. This one was a partnership between the BTR from the BSP, the Union Bank, and PDAX to issue bonds to the retail market. And this is very interesting because this is the first blockchain bond, government bond issued on the Ethereum blockchain. And we should be proud of that as Filipinos, and we could invest in it anytime as well. Here's a quick flow of our discussion today. So we'll just talk about history of blockchain and cryptocurrency. We'll kind of know like when was the first blockchain ever made, actually. We'll talk about some investment theory basics, very very succinctly, and then I'll share more about digital assets and the next frontier. So kind of our guide is like building the foundation, then knowing kind of going back to the tradition, and then finally after we know the tradition, like go straight at it and discuss the innovation. I know a lot of you guys are from business backgrounds, so we'll keep the tradition side as a quick refresher. And here are some of the questions that we'll be answering. Right? At the end of the call, at the end of the webinar, we'll have to answer or we have to know the insights behind these two questions. And so, quick intro. That's me. I wanted to keep it quick, quite informal. So later on in the Q&A, Um, Feel free to ask any questions about blockchain, about cryptocurrencies, investments. Um, I'm also from UP Diliman, as Philip mentioned a while ago. And right now, I act as the COO of PDAX. It's been a very interesting ride, wherein our vision has always been true from 2 years back, which is to give access to investments to as many Filipinos as possible. And this is the one slide you'll see about PDAX, just one. I need to get it out there. For us, we believe the future of investing is digital. Right? It is digital. We're going digital, especially with the pandemic. And no one should be left behind. Right? How can we even give access to um, the CD or the e-market, right? From farmers to people in the barangays. Can we give access through investing in sari-sari stores? Can we give access through investing, um, in their local bayans? How can we give access and help them as well? And that's a far road ahead, but we're getting there as well. So we go back now to the main discussion and talk about the history of blockchain. Right. Thanks, Philip. So let me ask you guys a question. Right? What do you guys think is the oldest blockchain in the world? What is it? If you ask that and I give you 3 seconds to think, almost everyone or a lot of people will say, yeah, Bitcoin, right? It's the first one. But actually, it isn't. The very first one is all the way back in 1990s, around 30 years ago already. And what it was it printed this hash on the New York Times on the confident on the classified section, and it would just print it at every edition until now. It still continues. And so you realize that the distributed ledger technology or blockchain is actually years back already in terms of age. What Bitcoin did differently, and we'll talk more about it later on, was how it changed how it solved a key problem on peer-to-peer payments. So we have all of these people, right, saying, future of money is digital. Bitcoin's here to stay. I've invested in Bitcoin. And you have others saying good things as well about Bitcoin, right? Powerful people, influential people, well, they're interested in Bitcoin. Next slide, please. Right. And you also have companies investing in Bitcoin and blockchain, right? Either by creating blockchain departments in their companies or building and investing in startups that are invested in blockchain. And you see a common thread here, right? So you see here institutionally, there is interest, right? You see companies investing as well, putting money, big money, billions of dollars in Bitcoin. And you also see retail adoption in Bitcoin. There was a survey recently released a couple of months back about how common crypto is, right? And we see that it's becoming more and more common. If you look back for sure 10 years ago, the number would be closer to like 0.401%. You go back to 5 years ago, the number would have been like 5%. And now look at that, right? In some countries, it's even up to 20% or 30%. And the interesting thing here to note as well is Philippines is one of the areas in the world with the biggest crypto adoption. And you see that two countries above Philippines, right? They're high in percentage, but they're also smaller in exactly in population. So you can see how big Philippines and our crypto population is, and this is a very interesting time to be at in terms of crypto and in terms of inside the Philippines, because the possibilities could be more with more adoption. And so why all this hype, right? Institutions excited about it, investing in it, retail markets, you see a common thread with people purchasing or adopting blockchain cryptocurrencies. Why? And I'll take you 40 years back to the internet. Right? The internet, right? When you think about the internet, it is very much connected or similar to blockchain. And this is how I would explain blockchain pretty simply. The internet is, or the purpose of blockchain. The internet is connected information, right? Through the internet, we could share files, we could share messages, we could communicate to each other. For example, professor-student relationship, right? If I were to send a document for submission to my professor, I'm sending a copy of that document. I may still have it on my desktop, but my professor will receive a copy, right? If I were to send you a message on Facebook Messenger, I'm sending you a message on chat, but it's just a copy that's being sent to you as well. Similar case on YouTube, as you guys are watching this. It's a copy of an information, and information is not scarce, right? You can make multiple copies of it. And that was, I guess, the most recent big thing, internet. If you think 2 generations back, it might be commerce, like malls. 3 generations back, it might be manufacturing, right? Like the industrial side of things. And so the question now is, in our generation, what might it be? And people are saying it could very well be blockchain, and that's why you see a lot of media talking about it as well. And guess what, right? When the internet came out, a lot of people said it won't be, it'll just explode. It's just a bubble, right? You have you have a lot of people talking about it in the 2000s, even in the 1990s, saying it won't be there to stay. And it's similar to a certain extent to blockchain, but we're not saying it is so similar. But the question, who was right for the internet? Well, neither of them. And if we take a look at blockchain, the difference now is it is an internet of value. Yeah. If you check the next slide, the internet of information is great. It helps us share a lot of information to each other, but blockchain is an internet of value. So what it does is anything of value, due to its cryptography, due to its hash functions and nonsense, it can actually ensure that when you're sending something of value from one person to another, it's actually being sent. And more than that, it's just sent one time. You can't simultaneously send one thing of value to like 2 addresses at the same time, right? And you could easily think of it as an internet of value, wherein something you own, it doesn't need to be money, it doesn't need to be like pesos or fiat, a rare card, right? Or a gift certificate. You could actually send it from one person to another, technologically, digitally, and ensure that the ownership passes from one to another. But hey, right? If you think about it, you may ask, isn't that like Gcash? Isn't that like e-vouchers? And there is a very salient difference between Gcash and blockchain, no? And that is Gcash has a central institution. You have Gcash there, or you have Globe there, and your money is actually with them, right? As you pass it on. So there's that central intermediary. And of course, being a central intermediary, there are costs related to it, right? If you cash in or out from Gcash, or there's limits connected to it as well. So I'm not saying it's a bad thing, but there are certain consequences if there is a central intermediary. And you could see it all the more when you think about the real estate market, right? None of us could easily trust strangers if you were to sell, let's say, a condo unit to someone. And 90+% of transactions are between strangers, right? Not between someone you know, right? That would be a limited market. And if you deal with a stranger, normally there will be brokers involved, right? And brokers would normally charge maybe 2 to 5%, and that's a cost as well. And so you see here how something that is peer to peer, no central intermediary, no one brokering the exchange, because you're exchanging it at exactly the same time, is something that is very promising for finance. Next slide, please. Right. And Bitcoin solved this problem. So it's not the first blockchain, but it was the first to solve this problem. It's called the Byzantine generals problem, if you want to research on it. And what it means is, how do you make sure that you don't send the same thing to two people.
Mm.
But if you take a step back, what it actually, in Byzantine general's problem, what it means is how do you make sure two generals could attack the city at the same time or retreat at the same time if there's no central body or a central institution that's telling them to attack or to retreat? How do you ensure that? It's a coding problem, it's a mathematical problem, and Bitcoin was the one who first solved it. So now you could have something that's sent, and you can't send it back, or you can't send it simultaneously for some instances, which is something that's very interesting there, man. Okay, right, and that's how Bitcoin came to be, 2008. And if you see their white paper, just like I think a 9-pager document, it's a good read. If you read through it, the header says it's a peer-to-peer electronic cash system. So it was out of this kind of like distrust of financial institutions, and it talked about how we could build this decentralized platform. You have blockchain, Bitcoin wallets, and you could send assets from one person to another, right? And it's um, encrypted. It's has a very secure cryptography that allows you to ensure that once a transaction is recorded, you can't fudge it up. Meaning you can't say, oh no, there was no transaction that happened in the first place, or
Mm.
you can't say that, oh, I didn't send to this guy, sent to this other guy. You can't say any of those things anymore because it's written, and once it's written, there's no way about messing it up. The probability there is like 2 raised to the like 120th. So 2 raised to 1 over 2 raised to the 120th, which is roughly like 1 over 10 to the 40th. Um, but it's kind of like the probability of Bitcoin being hacked, or the blockchain being hacked. Very, very, very small. Okay. So there, Bitcoin started as a cryptocurrency, and now we have around 4,000 cryptos in the world. We have these top 5 on the screen, and you might ask, like, what separates them apart, right? Next slide, please. And so there's 3 main differences. We can touch more later, but the first one is ledger base. Uh, Whether it is a transaction ledger like Bitcoin, or it is a balance ledger like Ethereum. And so because of the difference in the ledger type, the applications on the blockchain is also different. For example, Ethereum smart contracts, whereas in Bitcoin, it's not as possible, right? It's difficult. Second is blockchain mechanics. So Bitcoin was a first, but then there are institutions who came to be and said, hey, I wanted to fix this aspect, this angle of Bitcoin. Some others saying, I wanted to fix that. And that's how those blockchain mechanics differed. Examples of these mechanics could be, one, the transaction fees. So if you were to move from one wallet to another, how much does that cost? Second is transaction time, how quick it will take. Bitcoin will take around 10 to an hour, 10 minutes to an hour. Some will take a few seconds. Right? Third is, I would say the cryptography used, right? Whether how secure or the code of the cryptography used, hash functions and so on. And lastly, it's transaction validation, meaning how is consensus achieved between all of these computers? And you have these things called proof of work or proof of stake. But basically, and that's a large difference between cryptocurrencies. If it's proof of work, that's where the mining or a lot of energy is consumed. Um, that was the first ever consensus mechanism, proof of work. And then you have like proof of stake, which basically is based on how many percent share you have stake, you actually get a reward anyway. So now there's not that high competition of like computing power to get that block minted. So that's also a key difference between these cryptocurrencies, and you'll see them being mentioned, being talked about, pretty frequently. Right? There's these 3. So cross-border payments, as for remittances or corporate transfers, is big because if you use, like, for example, Swift, right? Companies usually use that. You'll normally take like 2 days, T plus 2 days for it to be settled.
Mm.
Um, well, some cryptocurrencies, they could take a couple of minutes, right? And the fees are much less. Investment instrument as well, right? It's 24/7, and a lot of traders enjoy that. There's that heavy speculation due to the volatility, and it's also a form of return through staking as well. Right? And lastly, it's a medium of exchange, right? It's a commercial mode of payment, being more and more so. Um, Around 4 years ago, I was at Europe, and I said in Czech Republic, and it was very interesting. I saw in the museums there, even as far back as 4 years ago, they were accepting Bitcoin XRP as a mode of payment to enter the museum. So you see this adoption and it's growing. Of course, with Visa, PayPal, and the others coming in as well.
So Kyle, before I think you've tackled basics, right, of blockchain, crypto, and we know what it's used for. I wanted to take a pause here, right, to really try to, because I know that was a lot of tech speak also, right? I follow crypto maybe about 4 or 6 months ago, and I started learning about the logic behind it, right? So basically, I think one of the things that people understand about cryptocurrency is that it is currency, right? So when we say cross-border payments, then you technically don't have to use PayPal anymore, for example, right? To as an
Mhm.
intermediary to send your money from one place to another, and that makes
Mhm.
it faster, cheaper, etc. But in the blockchain, right? When you said, oh, okay, Bitcoin wasn't actually the one who discovered blockchain. It was there years ago, but it was Bitcoin who solved that one problem of the double spend problem, right? Or the Byzantine generals problem. But if you think about it, when you say blockchain, right? Um, does someone or one entity actually create that network? Meaning, can I create my own blockchain if I have the resources and the tech to actually do it? Or do I have to use one of these existing blockchains that are already there?
Very good question. There's two ways I'd say. One is you can make it yourself if you're
Okay.
technologically able. You could build a new blockchain. That's why you have a lot of different blockchains: Ethereum, Tron, Cardano, Bitcoin, XRP, and it could be made by communities. It could be made by corporations. The second way is, and this is what's happening now, which almost always happens in any market: consolidation. The second way is, you don't want to start from nowhere if you're not that capable and done well. And so you could actually build a cryptocurrency or build your blockchain as a node to their blockchains.
Ah. So
So
you
you
can
could go
create
into Ethereum and create.
an entire new one, or you can go into Ethereum, for example, and create one in their blockchain. Got it. And
Right,
that's why
right.
you have all of these, like, so many coins right now, because some of them are probably on their own network, but some of them are latching on to maybe Ethereum's network, for example.
Right, right. Exactly.
Got it. Okay. I hope, guys, that was clarifying things, right? At least for me, I always get confused with all of these new coins. So I just like to remind, I see some comments in the chat box. I'll try to bring them up when they become relevant to the discussion. But if you have questions, just put them there so that we can address them later on. Okay. Okay, I'll let you go to the next slide.
Sure. This will quick go fast, right? Investment theory, there's three main types: debt, equity, and alternative investments.
Mm.
We all kind of are familiar with that. Um, and this is a quick recap, but what we kind of need to know is cryptocurrencies are inside alternative investments,
Mm.
in that third catch-all bucket. And how it works is in the spectrum of investments, next slide, please, cryptocurrencies um, actually is there in the foremost in terms of, you know, because of its risk, because of its implied standard
Mm.
deviations, volatility, it's marked as one of the riskiest assets to invest in, right? I mean, even if a price keeps going up but goes up very much, it's volatile. It becomes riskier because the potential for it to go down suddenly is also attenuated. So this is a good graph, a good spectrum to look at for those starting out, right? Risk and return. You can't get more risk without having to. You can't get more return without having to sacrifice and take in more risk.
Yep.
Right? Even if you find a business opportunity or an asset that you know takes in little risk but heavy return, sooner or later someone will find out. Sooner or later, someone will get there, lower returns, and it'll go back to equilibrium somehow. So this is the spectrum, and let me highlight just three. First one, next slide please, is T-bills or government bills. Right, in the Philippines, if you're looking to invest, you like to get around the 2% return
Mm.
currently, and right, you could beforehand you normally spend like 50,000 to half a mil as a minimum if you're to go to local banks or the global banks like Citi or HSBC. They have like these stark minimums. Now there are lower minimums. What I know of in Bonds PH, the minimum is 500 pesos, and I think G Invest has also launched something recently,
Right.
um, and
50
that's
pesos.
something that's an option as well. Right. Second is equities. Right. You see now it's 30 to 50%, and you can go through these brokerages. But what about cryptocurrencies? How do you juxtapose it against them? Well, it's 2 to 3 digit volatility, and if you look at the past 5 years, right, 5 year return, it's around 8,000% increase, averaged on the top coins. The minimum investment in PDAX is 50 pesos, but I think it ranges across other platforms as well. And here's my general advice for those looking to trade cryptocurrency now or thinking is now the right time. Should I wait? What should I look for more um, interest, or should I look for more news before
Mm.
I jump in? Right. Um, so where? Obviously, I'll share you where you can, but let me just say that hopefully you choose PDAX. But if you had a goal, this should be your goal. Like find the lowest fees
Mm.
and the ease of cashing in, right? How quick, how easy it is to cash in, and what are the lowest fees. And be very careful of implied fees. Some people or some platforms would say no fees, right? No transaction fees, but the spread is very wide. Right? It
Right.
could be like a few hundred, 400 bips. So be wary of that, and ensure that you just find where can you get the best price, right? Including all the fees, conversion fees, and etc. And some general advice is to just start now. Don't wait for a bull rally. Don't bandwagon yourself. Others are going in, but just start now. Place a small amount today. Even whatever small it is for you, whether it's 500 pesos or 5,000, 50,000, or 500,000, just start and put money in. Because once you're in, tali ka yan, you get to see it more. You get to actually notice the price movements, and you learn. You'll force yourself to learn more. So just start with an incremental amount,
Mm.
and then buy in tranches afterwards. Right. And now we talk about digital assets, um, and which is the next frontier. Next slide, please. Right. And we have to ask what makes them different, right, from traditional assets. Next slide, please. And it's generally three things. First is an immutable record keeping, and what that basically means is a ledger that's hard to fudge up. Right? Inherently, in anything, you have ledgers. Banks are ledgers, stocks are ledgers of ownership. But then when you talk about digital assets, the record keeping is in the blockchain. And so it's hard to fudge up or to erase or to delete or to change any information, any record of ownership on the chain. So there's that immutability. And second is there is a potential for smart contract integration. This is pretty interesting because smart contracts, what it means basically is a contract that can automatically execute itself.
Mm.
Right? You put in all the headwork, all the thought at the start, making sure the contract is clean and complete, all the stipulations, and then it will self-execute itself. Simple case is an interest-bearing loan, right? You code it up. Philip, you can give me 1,000. You can do it a smart contract.
Correct.
Every quarter, let's say it's 4% per annum. Every quarter, I'll give you 10 pesos back, and it will just deduct from my GCash or from my bank account, and you'll get the 10 pesos. At the end, you'll just get 1,010, right?
Yeah.
And I won't have to do anything because normally human-wise, there's a tendency to maybe I can delay it a bit, or
Correct.
I forgot, so it avoids those things, right? And smart contracts have bigger implications as well. Like imagine a smart contract wherein like foreign company ownership
Mm.
on Philippine stocks, right? And the smart contract could say the moment it hits that relevant threshold, where it's 20, 30, 40%, you could actually stop all. You could actually gray out that buy order for foreign participants, so that they could stop exactly at that
Correct.
moment. And that's not what we're doing now, but that's something very interesting,
Mm.
right? So the government actually is interested in things like this as well, and it's omni-purpose. You can do it on any asset. It's fractional, so it can. You don't need to have board lots because it's easily divided into up to 8 decimal points.
Correct.
Next slide, please. Right. So you have these concepts, right? Think about it. Gold tokens, wherein one token is a gram of gold. You have this, like DGX in Singapore has done it for the past few years. They have a physical vault where the gold is stored, um, and there's that digital counterpart, right? So it's important when you think of digital assets. It's not like made out of thin air, but it is something of physical value or something that has value,
Mm.
and that's an underlying. And then you digitize it, and you safe keep that. If it has a physical, you safe keep that. So it's real 1:1. Oil as well, right? A token being a liter of oil, kind of like what we talked about a while ago.
Yep. And so
Next slide,
Kyle,
please.
question on this one before you move to the next slide, right? When you think
Sure.
about tokens, for example, when you say gold or oil tokens, are those other kinds of coins then? Meaning I have to create another coin called whatever, a gold coin, right? Or can I peg that to an existing coin already in the market? How does that work? If say for example we do gold tokens in the Philippines.
Right. So there's two ways you could do it. One is you actually get one of the coins globally. So it's a token already. Like for example,
Mm.
DGX, or I know there's also some other gold tokens out there. You could actually list it, for example, in PDAX, and you could purchase it already.
Mm.
Or you have a new issuer, like in the Philippines, that says, "Hey, I have a gold vault. I'm interested to issue gold this gold coin, right?" So it could go either of those two. Simpler, of course, is the former.
Got it. Okay, very clear.
Sure. And here's a very interesting case, particularly on oil, right? Historically, we've known oil, at least for Filipinos, but China globally, is very connected, is very
Mm.
correlated with inflation. And this is an interesting fact, right? If you price of oil goes up 25%, you see all of these items going up, right? Because it's
That's true.
heavily entrenched in our supply chains.
Correct. Like you need oil to actually deliver these goods to end consumers, etc.
Exactly, or
Yeah.
process the goods,
Yeah.
right? Uh, and so we found out, right, that through analysis that fuel price savings for motorists are there. It's an inflation hedge for consumers. Like you can put your money in oil.
Mm.
If you think it goes up, it will go up, and then you put it back into pesos, right? And then you actually have more purchasing power after.
That's true.
And it's also a price discovery mechanism for like institutions. And what's interesting about it is it's not just correlated, but it is a leading indicator for inflation. Right? It goes first,
That's true.
and that's very important in anything that it is a leading indicator, not a lagging or a simultaneous one, because we could track it and invest in it first before the inflation hits.
Correct. And so what you're saying basically is like just as a use case to make this a bit more real for our viewers, right? Is
Right.
if you know, for example, that the price of gas, right, is cheap today, um, typically your only option in today's world before price lock and similar technology is you would get gallons and gallons of gas and buy containers and maybe bulk up on your gas. And this is typically where if there's a rollback, you would see queues at the gas station sobrang haba, right? Because people are trying to maximize whatever gas they can buy. And that's true because they know that price volatility in gas is very high. So let's use that as an example, right? And then so what Kyle is saying, what if I digitize gas and so that you don't have to buy liters and liters, which is actually also a risk, right? Because you may end up exploding the container if you use the wrong one or if they're exposed to so much heat. So there's even risk in that. But what if we convert that into a digital token and all you have to do is to have an app or a wallet that will store maybe 100 or 1,000 liters of that gas, and then you can maybe 2 months after when the prices go up just go to the gas station and sort of cash in or redeem your gas tokens, right? So hopefully that gives you an example of real life use cases that uses the same technology as what you have already in basically in cryptocurrencies.
Exactly. Well explained. You could be a influencer already, yeah, or a spokesperson
See,
for
I am
price lock.
learning this very very interesting option.
Right. And you actually see that in the US. I think around last week, yeah, just last week, there was a oil shortage in the southeastern states below New York, and like those states, because of like the pipeline being blocked, being hacked,
Hmm.
they did not have access to oil. So a lot of citizens there, a lot of residents actually, drove through the gas stations because that's the only thing they could
It's
do
true.
to store up oil. Um, so here it's interesting because you can actually hold oil
Hmm.
and redeem it next time, right? Um, as another use case there. And so you have all of these assets that you can tokenize and think of, right? What about real estate,
Hmm.
where the token, one token of something, could actually be 1 square meter of land? And let me ask you, Philip, how much do you think is a piece of land in BGC?
My God.
Let's say a land with a decent sized building. How much
Two,
would that cost?
200K? I don't know. Per
Look,
square
land
in
in BGC,
BGC?
yeah, a whole the whole lot,
Ah, the whole
and
lot. Okay, okay, okay. I thought
if
you
it's
were
sold,
thinking
yeah,
one
by
square. 200
yeah,
million, maybe.
200 million. Right? The viewers could guess as well, but let me share it. It's actually closer to 10 billion
10
pesos
billion. Okay. I am way off.
for prime lot with a building very decent size. Some could go up to 20 billion, but that's a price, right? And if you
Hmm.
think about it, who could have access to
Correct.
price appreciation in BGC? I think it's less than like 0.01% of Filipinos, right? That so if we can tokenize a lot there, turn it into a token each, and you might say, 1 square meter is still very expensive. That might be like 1 million pesos, right? Well, guess what, right? These tokens are fractional, so you can
Hmm.
actually just purchase like 0.501, right?
Hmm.
0001, and that's what just 100 pesos for now, and you can slowly accumulate, slowly on until you have a square meter, and you can earn through the price appreciation of that piece of land.
Correct. Which before you couldn't do because basically, right? Maybe if we take 20 years back, right, when BGC was purely grasslands and nothing, right? Then maybe what you're saying is that would have been a time where I mean, you could have afforded it, but also you didn't know what will happen to BGC. But now it's the barrier for entry is so high, only the 0.00001% of the Philippines is able to buy, right? So if you have these use
Absolutely.
cases, it actually democratizes investments, right? So balik tayo sa parang sachet approach na if I can buy only maybe 5,000 pesos worth of BGC land, I actually am able to do that with tokenized digital assets.
Yep. Yep.
Nice.
Exactly. And the list goes on.
Mm,
You could think of other assets. Like what else? Could you do it with Chicken Joy? Could you
maybe.
do it with anything of physical value that you
Mm,
can redeem? How many parts is a chicken, right? 8 parts. Or you can redeem it in like 0.125 increments in Jollibee. Hey, if they want to do that, that's something they could start doing, right?
that's true.
So it's interesting. And for them, if you go to the other next slides, please. Um, here, like you can skip through these already, but it just goes to show the UX and how
Mm,
the app could be used as early as today. Here. if we think about it, like what is in it for the stakeholders, right? We kind of have heard why it's good for us, for retail investors. But how is it good for companies, right? The
Mm.
issuers. Traditionally, when we, as CPAs, traditionally when we raise money, right, we look at the balance sheet and it's what? What are the two ways to raise money?
You either borrow, right? Or you get private equity investments into, or public equity investments into your business.
Right, right. So it's either debt or equity, right?
Mm-hmm.
Um, well, digital asset offerings, DAOs, what it can do is you convert an asset instead and
Mm-hmm.
raise money by converting that asset. So you're not giving away equity, you're not taking a loan, you're not, you know, lowering your leverage
Mm-hmm.
or increasing your
Increasing
leverage, I
your leverage.
mean. Um, but you can actually turn an asset that's slow moving, and convert it into cash, right? If it's an oil manufacturer, it could be the oil silos deposited. If it's a real estate company, it could be your building, right? And
Mm.
then you convert it to cash, you can actually start building your next building. Um, and the list goes on for Jollibee. They'd be happy because now, some of the chickens in their poultry farms, they can actually pre-sell it via digital asset offering, right? They just need to know that there are chickens out there that corresponds to the number of tokens or number of chickens that they sell. It sounds funny, right? But hey, the applications, you could have a whole night to discuss each one of those.
That's true.
um, and even the Philippine regulators would be interested. Sure. These are all the other use cases of companies, um, governments, public institutions, doing things in the blockchain space.
Mm.
You have the World Bank, you have the Dow Jones, and you have SGX, the Swiss exchange, moving. And you see here that this is where we're headed towards. It might not be Bitcoin. It might not be these cryptocurrencies that we talk about now. That becomes the end all be all. It might be several. But what we do know right now is there is adoption on both the institutional
Mm.
side and the retail side. And whenever you have an adoption and strong interest, right, everything is driven by humans anyway. It's driven by each one of us, like thinking, hey, we could do that, we can do that.
That's true.
Um, things could move forward, and we see things are moving forward globally.
And so,
And that's kind of it. Yeah, yeah,
yeah.
Philip.
So, Kay, maybe my question is, right, with all of these use cases, because I think up until now, people see cryptocurrencies as the main use case of this blockchain technology, right? Meaning, I see coins
Mm.
being transferred and coins represent some value. So, that one I think almost everyone sort of follows, right? Even very vaguely. But now you're telling us that the blockchain actually can transact different kinds of digital assets as long as they're pegged to a certain item of value. Is it now possible just because Bitcoin or Satoshi Nakamoto, whether he's a he or a they or whatever,
Mhm.
um, because they saw that double spend, was that the only one missing link that really pushed us forward to where we were before Bitcoin, when there was even blockchain then, and after Bitcoin, now we have all of these use cases. Was that the one thing, or are there other things that happened?
It was the biggest thing that happened. That Byzantine general's problem. It's decades standing as an unsolvable problem. And so when it was solved, at first for a couple of first of years,
Mm,
people were like, "Oh wow, this is big. This those were like crypto punks were like, "Oh, this is big. It will move the needle." But then as more and more, people who knew what they're doing
mm,
looked into it, they started thinking of what tweaks could I do with Bitcoin, and so they started to look at it to understand. There's this thing called the Bitcoin core,
mm.
which is basically the how things are set up, right? So they look at it and try to replicate it, and create a new blockchains.
Got it.
And these are like innovations on the main invention, so to speak.
Got
But
it.
it's very interesting how it all grew and grew.
And so I think
On
that's
top of each
why
other.
really when people ask about cryptocurrencies, they would probably know Bitcoin. Like forget all of the other coins. They will all know Bitcoin because of that, right? Guys, that's the biggest contribution of Bitcoin where that long-standing problem was actually solved. And now, you can really see na ang use cases, dumadami siya. Right? Even just with
Right.
price lock and bonds.ph, right? That's just even just think about that. Don't need to imagine anymore because those are actual available technologies and offerings that you have today. So you can actually use them now, right? And I think that gives power to the concept of the blockchain and on cryptocurrency technology in
Mm.
general, because
Mm.
I think if you've been hearing about this in the past maybe 10 years, right, and this is probably one of my regrets of not trying to learn about cryptos much earlier on. I would have been so rich if I if I've learned this maybe 10 years ago,
Totally.
right? But I think that's one thing I want all of you to take away from the session is really trying to understand ano ba talaga to? Because once, hopefully, with Kyle's very plenty of examples, that gives you some level of understanding na, ganito pala siya pwedeng gamitin. And obviously, when you see something being used, something being really adopted into our lives, right? Like, just think about Facebook, right? Before Facebook, there was whatever, crappy social media, right? Friendster and whatnot. But really not to the tune of what Facebook is. So, before Facebook, I mean, they didn't invent the internet, but with that much utility, like several billions of people on the platform, that has value, right? Mr. Zuckerberg is now what, close to $100 billion worth. So we know that with utility comes value, and I think that's where sometimes now it's very hard to understand because yung utility ng cryptos are a bit vague, right? I think, Kyle, you see this
Right.
more often. On a day-to-day basis, you see this because you work in the space. But for us,
Mm-hmm.
like the average person, right? We don't really see it. Like I still don't pay for my coffee using Bitcoin for today,
Right.
right? I still don't do that. I am, and that brings me actually to questions. I think we were at the end of the presentation. So,
Right.
guys, I just like to remind you, I'm trying to backtrack on chat. I will bring up a few questions in a few, but a quick reminder, if you haven't done so yet, please go to the link and enter your details so that you're in for the raffle draw. We will be doing that in maybe about half an hour from now. So I'll still give you time. I will queue later if the registration is done. But you can scan the QR or you can put the link. So don't forget to do that because we're giving away 1,000 worth of Bitcoins, 500 worth of Ether, and we're gonna give 3 winners of 300 worth of Ripple. So 5 winners overall. That hopefully gives us a good
Hopefully it's a
chance.
million in 10 years' time.
I know, and I don't know, right? I mean, if Ripple decides to,
Who
quadruple
knows?
in value, that will be a very good investment to begin with, right? So, but I wanted to start, Kyle, Q&A, right? Very basic. We all know that I think how to trade crypto is very similar on how to trade stocks, right? In trying to understand the how, right? So I think there are questions here on if you're a newbie, what do you need to learn or what do you need to know before you invest in cryptocurrency? So I can probably take this and then Kyle, you can add, right? Basically, think about it like you're actually trading something of value, right? Magkaiba lang silang things. So, right now, you can even trade certain commodities like gold, oil, and other commodities, right? So, as long as there's something of value and there's an exchange that's built for it, you can actually trade it. So, ang pinakamalapit siguro na example that we can think about is the stock market, right? So, if I have, say, an Ayala company, we know that that company has intrinsic value based on their operations. So I can buy a share, right? I can buy a stock of that company. Bitcoin or cryptos sort of work the same way. It's just that you're not buying a share of a company, you're buying a coin representing some level of value, right? So, depende kung ano yung ang consensus ng market kung ano yung value ng coin na yon, right? So that's why it's a bit different, but in reality, it actually works the same way. So I think, Kyle, ito yung question ko, right? With that answer, I wanted to get a
Mm.
gauge on ano nga ba talaga nag-drive ng value and why are all coins all of them have different kinds of values. Like say Bitcoin, 50,000, USD. Tapos may coins din na parang mga, okay, 15 cents. Right? What's the disparity between the valuations?
Sure. It's a very loaded question, huh?
Yeah.
But let me try to answer it in two main parts.
Sure.
The first one is on value, nah. And let me compare it to values of like other assets to understand its value. Well, cryptocurrencies, right, is a social construct in a way. Most of them are. Right? What's Bitcoin's value? What's Ethereum's value? And currency, we know, is also a social construct, right? Fiat money, right? The peso or the US dollar. How do we know how much it is worth? Gold, 80 years ago when it boomed. How did we know how much it would be worth? And it was just a social construct, people thinking and adding on to, it might be this price, it might be that price, I want to buy onto it. And we know gold had skyrocketed since 100 years ago. We know currencies, fiat currencies, also could appreciate and depreciate, right? Relative to others. And so when we talk about cryptocurrencies, we need to know that, right? It is, in a way, as you mentioned, a social construct, but also how much is it worth compared to other assets globally? We know the cryptocurrency market is around $2 trillion in size. $2 trillion now, right? Is that big? Well, how much big? How big are the others? We know gold, which is something very much often compared to Bitcoin,
Yep.
because Bitcoin's digital gold is around $11 trillion in size. So if you do the math, Bitcoin's around 1 trillion. It's around 10% the size of gold right now. And a lot of proponents have been saying, we think Bitcoin will go up to the size of gold. That's one angle to think of. But that's a market to compare it at, 11 trillion. But what about the two biggest ones we were talking about a while ago, right? Equities and bonds. Equities market globally, it's around $80 trillion. $80 trillion. Again, compare that to the 2 trillion. Bond markets, when you talk about government bonds and private bonds, it's around $200 trillion. Right? And we haven't even talked about the biggest asset class, which is derivatives. That's like quadrillions in size because you have leverage there. And so when you now shrink yourself all the way back to cryptocurrencies, right? You're in this $2 trillion market. You get to have a feel of how big or how much more it could grow. At the same time, how big the adoption has been, right? Compared to those, to those like legacy investments. That's the first answer. And but you asked about value. If I were to be a retail user, how would I decide whether what I'm buying, which coin I'm choosing? And a good mental framework to use is to think of it in three parts: fundamentals, technicals, and community. Right? Community like Twitter or Reddit. So fundamentals, that's simple. You need to make sure it's scarce. You need to know that there is a scarcity mechanism. We know, for example, in Bitcoin, by the year 2140, all Bitcoin would be mined. It's an asymptotic graph in terms of how much Bitcoin we have globally right now. I think we're around 18 trillion. We'll reach like 21 trillion. Sorry, 21 million. Right. And you also need to think of, in the fundamental side, right? What is its purpose? You kind of also know in Ethereum, right? Its purpose is smart contracts, and it's an ecosystem, what they're trying to push for other tokens. So that's something to look into. Cardano, for example. The founder of Cardano was from Ethereum, and he set up Cardano as a way to lower the fees and to move from a proof of work to a proof of stake mechanism. Ethereum is moving from proof of work to proof of stake. That's actually one of the fundamentals to look at, whether it's proof of work or stake, because there are heavy implications both on a cost basis and on a profit basis for the retail user. Cost of the world, meaning like mining and all, but also for the user's revenues. Because if you can stake it yourself, it's easier to stake than to mine, for example. Next is technicals, and here they say cryptocurrencies is the technical analyst's dream come true because it's 24/7 and it's very like up in the air, so it very much follows some technical analysis,
Mm.
and a lot of algorithms use or invest in cryptocurrencies. So algorithms actually are purely technicals. So, or mostly, not purely, are mostly
Mm.
technical analysis algorithms. Where if this setup happens, do me a buy. If that setup happens, do me an ask sell. And so it's very interesting to look at the technicals. One thing I would suggest to look for on technical analysis is how much the daily trading volume is as a percentage of market cap.
Mm.
You mentioned a while ago how there are some coins where like Bitcoin's like 60,000 or 50,000, and you have some coins like just cents or less than even 1 cent of a dollar, right? Do not look at that.
Mm.
Look at the market cap because those that are small in price, normally what they do is they just have billions of tokens instead of millions,
Correct.
right? So you have to look at the overall market cap, and one thing to look at is the daily trading volume divided by the market cap. The larger that number is, the stronger, the better that particular coin is to
Mm.
invest at. The larger that number is, because it means it moves
It
more.
moves faster.
Um, yeah, and there's likely more bullish interest with
Correct.
volumes. And the last one, market sentiment, communities. So look at Twitter, look at Reddit, and that's where you have the likes of Dogecoin popping. You have the likes of even going outside the crypto space, right? The Wall Street bets happening. That's becoming all the more a third thing to look at as well, I would
Mm.
say.
Got it. And I see that in the comments, right? So Sid is saying
Mm.
just buy Doge and just hodl forever. and,
Right.
and and I
That's
think
a third angle.
that's the third angle of, are there a lot of people actually believing in that specific coin, right? So I think um where this is a bit more I would say theoretical, and that's why I think a lot of people are having difficulty understanding it, is when you think about investing, right? Or actually trying to earn money. I won't even say if it's investing, right? For the longer term. But if you want to
Mhm.
make money off cryptocurrencies, right? There are literally two sides to it, which is what Kyle sort of touched on. One is on the side of really like trading. It's like stocks, and you have traders who are really doing it by second, by minute, by within day, a few weeks, right? Called swing trades. And you can do that because if you know when to enter and when to exit, right? If you know how to read those patterns, I mean, those aren't guarantees whatsoever. But you can make money off it, right? And I think that's where a lot, maybe 90% or more of people are right now, right? I think the only caveat is to Kyle's point, you have to sort of understand those three things, right? One is the technical, which sort of gives you an indication of kailan ba akyat baba, because nobody can really predict it fully, like foolproof, but that may be a way. You also have to understand the fundamental side of it, which leads me to the second kind of strategy where you just hodl, right? Or hold on for dear life. And you just hold for a longer time, because we've also seen that if you held on to your Bitcoin in 2010, you would probably be like a multimillionaire now, right? That's what some people believe in, right? So there are those two broad strategies, and these strategies are not new, right? They've been there for the longest time, even with stocks, and even some with what you have in mutual funds or UITF. So the concepts are the same. It's just that I think what's very important as we deal with cryptos now is that you understand that the volatility can be very high. One, as it's trying to figure out what the right value is, and while there's still that third element that Kyle said, the whole market speculation side of it, right? And so that's where you see if influential people like the Mark Cubans of the world or the Elon Musks of the world, if they have a point of view on a coin, then sometimes they can bring entire Twitter with them, right? And then really drive up price. Because at the end of the day, it's really just willing buyers and sellers that's driving the price up or down, right? So that's how you probably think about it. I hope those are good examples on how you see value
Yes,
today, right? Ron has a question, Kyle. So one is on,
Ron.
so hi Ron. I think this one is a good question because this one is related to regulators, right? right now we're saying it's decentralized, right? So I don't need Gcash to actually send money from me to Kyle, right? In the future, I can just send that directly. I don't need a bank, a financial institution. So do you see that there will be regulation coming into play, more of maybe US or maybe I don't know, even Philippine kind of regulation?
Sure. Very good question there. And regulation, it will depend on the jurisdiction. We know, for example, in New York, the regulators there are very strong. They think they could see anything, touch anything,
Mm.
and they closed down. They locked down on cryptocurrencies. And so right now we have very small amount of cryptocurrency adoption in New York, vis-a-vis all the other states.
Mm.
So like the cryptocurrency world actually said, hey, let's grow all across the states and then just go into New York last, right?
Mm.
But so to answer that question, do we see regulators coming in? Likely, yes. I mean, even in with PDAX, right? We work closely with the regulators.
Mm.
It's nothing bad, and we meet with them. We talk to them regularly, right? Make sure we have KYC rules in check, and um, we're licensed, for example, by the BSP. So regulators are also in the Philippines. The question now is, will they help make it like a sandbox, a more interesting, an easier place to be at
Mm.
for companies to grow, or will they try to really lock down? And we realize that in the Philippines, thankfully, we have a very helpful regulators. Mm. And banks, on the other hand, I would say there a lot of the global banks have looked into it, even as early as 2 years ago, 3 years ago. You have the likes of HSBC, Credit Suisse, setting up blockchain divisions. Right? So that's sticky costs. Yeah? But they're setting up those blockchain divisions ahead of blockchain because they know um, this could be the next thing that will impact the industry. Banks are made of ledgers again,
Mm.
and blockchain is a ledger, so they're really looking into it. There is this blockchain called R3, Corda, R3, made by RT, the company. And if you look at the investors of R3, they're actually all the largest banks in the world. It's invested by the largest banks in Asia, right, the HSBC. Um, you have the banks in Europe. You have the banks in the US. The biggest names you can think of,
Mm.
they're the investors for this. So and the R3, the vision is to build a blockchain for banks.
So what you're saying
That's
is,
interesting.
while there is regulation, this is more really to help on KYCs, putting in some framework on exchanges like PDAX, for example, so that there are like requirements to get people into the network and all that. And that actually can
Right,
help with adoption, right? I think that's the
right,
flip side of it, because while the blockchain itself is still decentralized to begin with, because it's really still being done by all of these proof of work or proof of stake concepts, but the exchanges like PDAX and other kinds of platforms, the regulations can actually help spur more users into the platform and make it easier for people
right.
to join, right? And then that's what you're
Depends on the
saying.
jurisdiction. Depends
Yeah,
on their strictness as well. But
got it.
generally, possibly yes.
Got it. Okay.
Philippines, yes.
So at least this one, Kyle, is more a question for PDAX, right? And a question on when are more new coins or networks coming into the platform. Maybe if you can give like a very very quick spill on how do you actually decide which coins get into PDAX, for example, like what coin started. I know you're adding in a few more. What's the logic behind those?
Sure. So I cannot say yet in this call, in this
Yeah,
webinar, when exactly,
yeah.
but it's in the works. There's several coins that will be released soon, maybe in the next few months. Um, and we have a listing framework. Generally, there are listing frameworks for exchanges globally.
Mm.
Right? What is your decision process in listing a coin? And one of which for us is it needs to be something that we've vetted
Mm.
is of exact use or of a real use, right? Meaning the company, the team, the founders, they're real, and they're not just a shell coin, just pump and dumps. But it's something that we find interesting and could actually want to invest at, right?
Mm.
Rather than putting in like suddenly 2,000, 4,000 coins in, because a good portion of those are fake, or I don't want to use that term like the S coin,
Mm.
um, but a lot of them are that type of coin wherein someone said, "Hey, I'll make an ICO,
Mm.
I'll create this coin, and I'll get people to purchase the coin through an initial coin offering, and then afterwards you'll see hundreds of them. They just fled. They took the money. The website never moved. There were no updates. So one thing is that, to make sure that the best interest of the public is also thought of. But there's other things that we think of too.
Got it. And so you're saying at least there is a pipeline of adding more coins. You have like a plan to add those after you do your own checks and due diligence, so that you really offer those kinds of quality coins, for example. Right? And there's a
Right,
lot of
right,
them, because I think because of the decentralized nature of this, essentially anyone can like think of a coin and just make. I mean, if they have the resources and the technology for it, they can technically make one, right? And there's no one that will say, okay, you can actually list. I mean, you can
right,
do it
right.
yourself, right? And that's probably the other flip side of, for example, if you juxtapose that with like stocks, right? There is actually a process with the SEC, etc., that you list, and so that's maybe the difference between the two. Kind
Mm.
of interesting question here. And really more of understanding from a value standpoint. Like I'm not gonna hold you to a forecast, but I really want to understand at least. I think I'm Kyle. Oh, very interestingly, you're also named Kyle. But I think the question is more if I want to expound this because of the differences in primarily between Bitcoin and Ethereum's sort of like vision for itself, right? Is there actually a possibility where Ethereum, because it being a bit more flexible with smart contracts and whatnot, that valuation can actually exceed Bitcoin in the future?
It can. No, but my thought here,
Mm.
obviously, this isn't PDAX giving any advice, no. But my just general thoughts. It has a potential to. Is it plausible? Yes. Is it a large chance? Might be no. The reason behind it, uh, because of the first mover advantage.
Mm.
So Bitcoin started 6 years before Ethereum, and Bitcoin is also until now being adopted first.
No.
Meaning, if, for example, you have the main funds or the hedge funds, right?
Mm.
Or the coins being listed on exchanges or being listed on the institutional market. More a lot of these institutions are only have Bitcoin being listed,
Ah.
and you can't invest in the others yet, the altcoins, so to speak. So for them, the adoption is very early, right? And it's just Bitcoin for them first. And also, when you talk about the investment policy statements, the IPS of people who are looking to invest, um, a lot of them just receive or their clients agreed to just Bitcoin,
Mm.
not the others yet. And so when you look at the overall market or overall demand right now, um, Bitcoin really could go high because of that, right? But for Ethereum, it is possible, as you mentioned, the technology, but it might not be in the next few years yet. Yeah.
Got it. And so you're saying just because, again, right, going to your three sort of points earlier, it's really just adoption and market sentiment overall that's gonna drive that price. Now, I think a more basic question here is more on what amount do you suggest starting with? And I think Kyle will agree with me. The amount is very personal, right? So it can be different for different people. What I like about now with digital is that these companies have actually made it very, very simple, right? It's like for PDAX, it's 50 pesos. You can start trading, and you can buy fractional shares. I think you don't have to buy one Bitcoin, guys, like which is like $50,000. So you don't
Sure.
have to do that. You can have fractional shares, and you can buy 50 pesos worth. If you're really, really new and if you want to learn, my advice, as with most investments, is to start small, right? Start with something you can afford to lose. Like 50 pesos, I'm probably sure all 200 of us in the webinar will agree, okay, maybe it's worth 50 pesos to learn something about crypto. So I would suggest start with that, or maybe increase that as you learn the mechanics of it and the fundamentals of it, right? So this is very personal. Some people start with very big money, and I hope they come into it with eyes wide open, right? Because as you see, while price can go up, we've also seen historically in the past that price could slash by 80%, right? So it can happen. It has happened before. So
Mm.
what's not to say it's not gonna happen again, right? Nobody really
Right.
knows. And so I think that's where you take that into account when you're putting money in. Now, Kyle, this is maybe, I don't know if you're the best person to answer this, but I will still ask you anyway. There is a question
Mm.
on recommended platforms on least cash in or other fees. I'm not even sure if you're allowed to comment, but what are your thoughts in terms of like how fees maybe are structured? Also, you alluded to this in the presentation earlier.
Sure, sure. So let me share what PDAX has,
Mm.
right? Because that's what I am most experienced with. For PDAX, uh, you could cash in literally like with zero fees in some of our channels, uh, through banks or through like Union Bank Bills Pay, for
Mm.
example. I think for Bills Pay, I think there's a 15 peso or 20 peso flat charge, right? So if you invest like 10,000, put in 10, I mean, what's that? 0.2%.
Mm.
So it should be manageable. Um, and in terms of the fees, I would encourage you to look at it in three areas. The first one is the cash in fee, right? How do you put money in into the
Mm.
platform? There are others where you put in USD straight away, right? You put in whatever some other crypto right away if you can purchase through your crypto card, sorry, through your credit card,
Credit card.
and that one might have a fee altogether or a spread
Mm.
altogether. So mind that, because sometimes it could be like 5% to 10% yung spread there, and sometimes banks I know would charge an extra fee
Like a
on
processing
crypto
fee.
transactions, right? Right. So that's the first one. Um, Putting money into that exchange, how much will it cost you? Second is the transaction fee, right? Um, how many bips it is, but a bip basically is 1/100th of a percent. So some will have like 40 bips, 150 bips, even some with like 10 bips. So how many bips will it be? In PDAX, it's 40 or 50 bips. The third one is the spread, right? And the spread is normally decided based on liquidity of the markets.
Mm.
Spread is the difference between the best, right? So best bid, best ask, the price difference between the two is your spread. And look at that, no? And how big that price difference is across different areas, different platforms. You add those three up, you kind of have your
Your total
total
cost.
fee.
Yeah. And
Right.
that's why I think that's good, right? So thanks guys for breaking that out. Then that's why I think you have to, and this is where I think maybe starting small sort of helps, because as you go through those transactions, the fees are not almost always said upfront, right? I mean, and it's not lying, it's not intentionally omitting, but how the fees are structured, you will see that there are like multiple tiers to them. Typically, the spread is probably the most invisible to you if you're not yet on the platform because you don't know what that spread looks like, right? You will only see it once you transact. So maybe a good tip is if you're trying to figure out different kinds of platforms, try small amounts and notice those price differences. All of these platforms will have different ones. And also you add in even into the mix, right, international platforms. So those can also be a totally different ball game, right? Where you transact with different currencies, like you do a USD, for example. So you have a foreign exchange transaction fee, etc., like depending on how you're cashing in. But in general, try to look at the total end-to-end fees. The only difficulty is that you don't have this in one place. I think some platforms say this more straightforward and more upfront than others. So make sure that you do your own research and try to make sense of those price fluctuations, because those can affect your returns, especially if you're trying to trade, for example, right? Where maybe you have 5% gain, but if you have 4% in fees, then you're technically just earning 1%, right? And that's not very visible upfront. So make sure you factor those in. So, thanks for answering that, Kyle. I think I have a question, right? More on utility, and I want to get your thoughts on this. We talked about this before. But basically, what I wanted to ask you is, now in the world of, you have an Elon Musk saying, okay, I will accept Bitcoin for payments to buy a Tesla car, right? Or I think I read an article for
He's revoked
Starbucks,
it. Mm-hmm.
right? You buy a Starbucks coffee using Bitcoin, for example. I don't know. I think that will probably happen in the next few years. It's not the most impossible thing, but how does that work if I don't even know what Bitcoin's price is, right? Right now, if I have a peso, or even if I'm traveling abroad, right? If I go to the US, I know roughly a dollar is 48, 49 pesos. That will not significantly change unless something big happens, right? So I know somewhere in the 48 to 50 range. And that's for me a bit of a tolerable movement. I know Forex moves, but it doesn't move like Bitcoin, right? Where in one hour, the price can be totally different, right? It can be like 10, 20%, or even sometimes more high or low. So how do these retail organizations, I call it a Tesla or a Starbucks, actually manage that? And how do I, as the person holding the Bitcoins for now, how do I manage that translation to real world costs? How does that work?
Sure, sure. Two quick points before moving to the main answer. First one was you mentioned about Tesla, right? And Elon Musk. He actually revoked that around a few days
That's
ago,
true.
and that led to a around 15%
Correct.
decrease, right, in the price of Bitcoin. Um, yeah, that Tesla won't be accepting Bitcoin anymore due to like environmental
Environmental.
reasons. Um, but look at the subtext, right? I mean, that's what he said, but what did he do? Tesla still holds all of the Bitcoin they bought, and there is discussion, or there are some rumors happening there, or happening in social media, wherein what they're saying is it might be a masterstroke for Elon Musk, thinking about what how could Tesla change the game altogether, right? Could they use the power bricks, the large battery storage that they're making? Could they actually turn those into mining sites, right? Where you can mine Bitcoin renewably through solar panels. Um, and as you purchase that mining the power brick, you could actually have a second use case for it, not just to power your
Mm.
home, but all the extra power you could angles that they're saying as a master stroke that Elon might announce. Um, so heed that with warning as well of that news. Second thing is you touch about price, and then, if it's US dollar, you might want to accept that small price volatility, right? If you're abroad. Well, it's an option to. It's not a requirement. It's an option to. And believe me, there are people out there who will very much want to
Okay.
have that very volatile commercial use case, right? Wherein they're eating dinner, and then before the dinner's finished, they're looking at the price of Bitcoin, thinking, when can I swipe my card, right?
Mm.
People may want that. People may be risk taking, and it's an option for those people. But to answer your question, right? How do we see this use case building up of Bitcoin or cryptocurrencies as a mode of payment? Um, on one hand, you have these small pops, small restaurants or small institutions suddenly accepting crypto. But the biggest moves are in the institutions of institutions. What do I mean by that, right? The MasterCards, the Visas, the PayPals. What are they doing to circumvent? singular adoption by doing a B2B adoption. So as early as now, for example, you could um, purchase, or you could actually have a crypto card wherein it's a debit card. So you have crypto held there, and if you swipe it at any like Mastercard terminal, right, um, it will accept that cryptocurrency as payment anywhere with a Mastercard terminal. And how that works is when you swipe it, you because it's a debit card, right? You're holding that crypto. You're exposed to the price volatility, but at the moment you swipe it, whether it's a restaurant or a store or Gucci store, right? It will deduct it at the moment of sale to your assets, convert it into the local currency of that establishment, um, and the sale is consummated, right? They're happy. They have their, whether it's pesos or Hong Kong dollars or whatnot, they have it. You're happy. You just subtracted it from your investments. You're okay. The price is going up, so you're happy because you got to buy that in a seemingly less price, right? And you can use it in any Mastercard terminal. So there's that use case where it helps the merchants. It also helps those who are kind of like risk taking.
Got it. And so Mark, I think like said it very clearly, right? It's very similar to FX logic, right? Where maybe if I have pesos in
Exactly.
my bank account in the Philippines, I use that same logic, it gets debited and then it's just like the point of sale conversion rate, right? So
Exactly.
basically that use case. And very interesting. I'm probably not the person who will take a risk of how much my dinner will cost by the end of the meal. But I get you. I mean, there probably are people who want to maximize their Bitcoin. And if it did earn maybe 20% in the 30 minutes that they ate dinner, then you technically get 20% off the bill. But I think maybe a bit of a skew, and we're nearing the end of the stream, guys. So before I take this question, right, just a final reminder. I have about 2/3 of you join the raffle. So if you still haven't done that, now would be the time to do so. I will be closing that in about 5 minutes. So that we can sort of do logistics on the back end. But if you are not yet registered, please do so via that link or you can scan the QR code. Now, question here Kyle, on NFTs, right, which I think have gotten more mainstream sort of coverage on the use of blockchain, and is PDAX actually in the business of trying to adopt that? But maybe before you answer that, right, like if you can give a 2-minute kind of explanation of what NFTs are for those who are not aware.
Right, right. So NFTs is a subset of blockchain or cryptocurrencies. And um, what it means is it's a non-fungible token, whereas Bitcoin, Ethereum, all those tokens are fungible, meaning you have like millions of that same token and it's all just the same, right? One Bitcoin is different, is exactly the same as the next Bitcoin. In non-fungible tokens, you have unique
Just one. Okay.
tokens, just one or just 10 of each, um, or just X number of each. And so it's normally used right now, right, for art, for artwork, digital art, or photographs or whatnot. Um, and it's a very interesting use case. It's the and a lot of people who are in looking in blockchain are talking about NFTs as the next frontier of the digital asset space, right? And with anything that moves, right, there are crazes that happen. For example, ICO craze was like 3 years ago. Um, so many companies did ICOs, but then like 90% of those coins actually became zero. Now NFTs, that might be a craze too, a certain a part of it or a big part of it. But um, let me give you a clear use case. I shared this to Philip. It's an NFT of a pizza chain in the US. So what they do is they've given out like NFTs wherein you can one NFT was you can claim it as a pizza. So you basically you transfer the ownership to the pizza store again, and then you can claim it as a pizza. So it's like a GC, right? But then they made this one very special NFT, just one of its kind, and only one. It's like a gold version, a gold pizza. And what it is it gives you, if you're the holder, if you're the one who won it in the auction, it gives you the right unlimited pizzas for ever, for till perpetuity. But as long as you own that, right, on the blockchain, you own that NFT, you could claim it. You can go to any of the stores. You can get as many pizzas as you want for your life or for perpetuity. And what's interesting about it is they've placed in not a smart contract. They place in a possibility there where you could actually just sell it to someone in the
Mm.
secondary market. So let's say after 1 month, sawa ka na sa pizza nila.
Mm.
You could sell it to
Benta.
your friends, sell it to someone who might want it more, right? Maybe he has a bigger family, and you earn it in the process.
Mm.
But now the ownership is to that next person. The pizza store, they're happy. It's marketing. They're
Mm.
happy. They've sold that one, right? So it's an interesting concept of how a use case for an NFT could be. PDAX, we're looking into it, but I couldn't say when, right?
Yeah.
When yet.
Yeah, but I think that's an interesting example. Even just this pizza case, I think it really helps bring to life the concept of blockchain, and this is actually what's exciting, right? If you can think about it, and I think somebody here, so James says you can actually use it for titles, documents, or even ORCR for cars, etc. Right?
Mm.
And this is what I actually told Kyle when we were talking the other day, right? If transfers of real estate can be done on the blockchain, imagine how life would be so much simpler. You don't have to go through several government offices, and it's actually a bit more secure, right? Because you're really just having just that one sort of digital asset representative of that piece of land. So I think the use cases are actually becoming more and more real because we're seeing it in real life, right? You see all of these NFTs, and while they are more of craze right now, I know there are like very very weird examples of NFTs if you follow that in social media or in the news. But if you think about the logic behind it, James is right that you can actually use it for the more transactional parts of daily life or on legal documents and whatnot. So very very exciting times, I think. And this is the power of understanding the blockchain technology, right? Essentially, it's a decentralized network where exchanges of value can be done, and it's being done now in multiple kinds of iterations, right? So you have the father, which is Bitcoin, who solved this very very long standing problem. But now I think, Kyle, we've been very far from the original white paper of Bitcoin, right? The use case has been very very transformed, I think, since then. And you see now even the likes of like a Cardano trying to like pull everything together into its network and all of this, right? And trying to make sure that, oh, now they're like the internet of blockchains, for example. So now you even have those kinds of applications and whatnot. And while we won't get into that in a lot more detail because it's gonna be super confusing, right? It's not a 101 anymore. Um, what I want you guys to end up with after the end of this session is really consider the use of blockchain as the underlying technology for cryptos and try to learn about the cryptos. For me, personally, I also do a bit of both from an investing standpoint, right? I do have some stake in cryptos that I think have long-term viability, and I actually just do a DCA or a dollar cost averaging strategy for them. So I buy them during the dips. I buy them in regular intervals, but I hold them. So I hodl these coins. Right? And that can be one approach if you're not the type of trying to look at trends and charts and everything. Right? So that's one approach, and it's actually very viable. The other one is you can also do all these trades and try to price speculate. But I think what Kyle and I are saying is those can be very, very volatile. So just make sure that you know what you're getting yourself into. You really, really can earn money, but you also really, really can lose money in the process, right? So just make sure that you always think about it in those two ways. Now,
Right. And Philip,
yeah,
going back to that broader stroke,
yeah,
I think James was the one who shared that.
yes.
Uh, he might, and the viewers might want to look into things being done globally. Have
Mm,
you heard about what's being done in northern Myanmar or in Nevada?
not yet.
But they're making blockchain cities. So it's not just a crypto. It's not just a currency that they're trying to put on the blockchain, but the health records, national
Oh.
ID system, and even going further into like voting or even um,
Mm,
street lamps commerce on blockchain supply chains. It's very interesting. the Northern Myanmar project was being done by China.
Mm.
Nevada is being done by it's near Las Vegas. There's a town there that they're trying to create as a blockchain city
Mm.
too. It's worth a look. Very interesting.
Right. So I think, guys, if you want to go into this wormhole of blockchain, right, search it in Google. I'm pretty sure you will find a lot of different use cases. I think, Kyle, just to give viewers, right, I think you had this one slide on resources that I think can be helpful if you can talk through those three like links that you have there, and then I think you have another slide also.
Right. Good checking there. This slide, basically, I would recommend these three as resources
Mm.
to learn more about blockchain. What does the Bitcoin tech really mean? We didn't get to talk about that, but
Mm.
all the hash functions, the cryptography, the nonces, um, and the features of Bitcoin.
Mm.
You could look at it on the second link. It's a very fast video. And then if you want to go deep into blockchain and its use cases, I would suggest the first video. It's an MIT, uh, like a MIT MBA
Mm.
course, and it's open for anyone to watch. So I would suggest that for everyone.
Yeah. Cool. And then I think you have like a long list of
Right.
resources.
So this was just for anyone else who's very much into finance
Yeah.
and wants to learn more about things outside
Mm.
cryptocurrencies. I would suggest looking to these people, and they've written books, they've written journals. So try to look at them.
Yeah. So if you can, guys, like if you want to go into this whole worm rabbit hole of different kinds of finance, take a screenshot. You can search them on Google. I'm sure you can have links to get their works. But these are good resources if you want to learn more and really just try to maximize what you can
Right.
do in the financial space, right? So, okay. So, just before I give Kyle maybe a few final questions, right? I am officially closing registration because I need to do some rejigging in the wheel. And we'll do the raffle draw very, very shortly. But, Kyle, I am going to ask you. I think there was one question that I actually missed. I am so sorry. I am not deliberately skipping. So Kenneth, I'm sorry I did not see this earlier. But I think I actually did not ask you this, right? So how did you get into the world of crypto, and why did you choose this space versus like the traditional routes maybe uh, of uh, of work, right? In the
Work.
finance space, right? Because I mean, as a CPA, not all CPAs go into crypto world, right? So I think if you can share that, that may be an interesting piece for folks who are trying to learn this space also.
Sure. Wow. Good question, Kenneth. And a shout out to all those in our table community. I think they're watching here right now as well. But to answer your question, Kenneth, it's I'll answer to one and the other. The first one on investing. I still remember the first time I ever invested, and that was in back in college, so mga 4 years ago, 5 years
Okay.
ago. Yeah, it was during the hype, um, and I just invested a couple of money in, like I think 500, 1,000 pesos. At that time, the coins.ph, yeah, was the only place to invest in the Philippines, and just started small. And I remember the second time it was fun, and there's a living here for like this was around 2.5 years ago, 3 years
Mm.
ago. Um, I decided to invest again, and I just placed 2,000 pesos. I
Okay.
went to a 7-Eleven by that time. It was harder. I literally remember paying the cashier, getting the money, and investing. And I did derivatives, Bitcoin derivatives. And believe me, Philip, at first it is a high. I
Mm.
was able to. That's why I did not talk about it in this call because it's a whole wormhole of its own. It's a whole.
Yeah.
It's something to look out for. But in that 2,000 pesos in 2 months, it went up to like 120, 130,000. I was like, what the heck? This is so easy because it was back on the back of like 50x leverage,
Mm.
and I just like exactly timed the market. But guess what? Like one night, the market dropped, and from 120, I was at zero. Right
Oh my.
after that, I was more. I invested much better,
Mm.
and well. But my learning from that, and I want to impart to everyone in this call is, um, it can go very high. It can also just dip down very fast.
Mm.
So be maingat when you invest in crypto. It's not something that you don't want to, just lose their capital and lose all of those
Yes.
gains, right? So just be wary, right? Be mindful. After that, I've always put stop losses. I've lessened my leverage. That was but that, we're young, so it's okay to have those fun memories as well. Um, Second is working, right? Um, I never thought I'd work in a startup, much less a crypto or blockchain startup.
Mm.
That's honest. But what made me decide to continue on was one, the founder, of PDAX. He's very, I think he's very smart. He knows what he's doing, and the vision of PDAX was very true.
Mm.
And I enjoyed, when I saw the company. But there was two reasons that made me decide to end up like taking this,
Mm.
like vis-a-vis other options, right? The first one was, being at the cutting edge of technology, so blockchain, fintech, understanding these things. I thought, you know what, if we have limited time in this world and limited things to learn, why not learn what's new? Because if you're standing at the precipice of progress,
Mm.
that's when you can start moving forward further. That's what I wanted. That's what I thought. Because my goal was maybe I could do something else, build my own startup, in the future. So being there at the precipice was something for me, right? Second was, even if this fails, even if blockchain, Bitcoin, fails, goes to ashes, knock on wood, but even if, it's still good learning, learning
Mm.
about how to build a company, grow a company from somewhere, right? And that was kind of like my thought process. My mentors at that time, my parents, and praying to God, that ended up making that decision, and I'm happy, where I am right now.
Great. Very inspiring. I think knowing that you are very interested in making this accessible to a lot more Filipinos, right? Is I think um, what I like about the PDAX mission of you guys trying to make it simple. I love the user experience and the design.
Thanks.
And I actually went through the entire process without reading your how to, so it was quite simple. And I think those are steps that I applaud, especially local companies trying to do that, right? Because it's still very very big white space, and you taking that step and trying to get more people into the exchange and giving them access. I think it's a very very good and worthy use of time, right? So I hope that answered the question earlier. I do see. I think your PDAX team is also in the
Well,
in the
hi
webinar. So I
guys.
think yeah. So thanks for bringing that up. I think you can download it in the major app stores. You can download the app. You can do all of it digitally, and even the KYC is done online. So you can do all that fairly safely in the comfort of your house, without having to leave to actually transact with a branch, right? So okay, cool. I think we answered a lot. Thanks, Kyle, for sharing. I know there were a bit varied topics. So let's go to, I think, what some people have been waiting for. So as I said, so let's go to the draw. So I'm just gonna do this very very nice
You.
wheel of names. So we had, I think, about 70 plus people sign up. So we're gonna do the draw first for the first three winners. So don't worry, I have your emails and your mobile numbers, so I can contact you after the stream. But we're gonna first draw three winners of 300 pesos each, for in the form of Ripple coins, right? So XRP coins in your wallet. So without further ado, I will start the spin. So hopefully you guys win. So we have a good win rate. I think there are five winners in total. So let's see who the first winner is. Okay, cool. So we have Carl Cedric Albunyan. Okay, let me just take a note of who won. Okay, so good, good. We're gonna take
Nice, huh?
Carl off the wheel, and then we're gonna spin again. So this is the second winner of the Ripple 300.
This is fun, huh?
Yes,
You
you
have
can do
70
this.
names.
Correct. Okay, so we actually have Vincent Kaluwag. So congratulations on winning your Ripple. I think what I like about these prices, Kyle, is that they can actually like have higher value in a few days. Depends on how the market
Right,
goes. Alright, so third
right.
winner of Ripple coming up.
Was that in the middle? Is that your logo?
That's my logo.
Is it
Yes.
called horseshoe?
No, it's like a
Yeah.
P.
So right,
Oh,
right.
Ron! Okay. Ron, congrats
Congrats, man.
for winning the third 300 Ripple coins that I hope will become 1,000 in a few days. So we're going into second place kind of prizes. So we're actually giving one winner 500 pesos worth of Ether or Ethereum network coins, right? So ETH. So we're gonna draw that. This is 500 pesos. So let's go. Okay, who is the lucky person? Cool. Okay. So we have Erica Sia. Congratulations for winning
Congrats,
your
Erica.
500 Ether coins. So 500 pesos worth of Ether coins, not 500 Ether coins. That is very very big. And then lastly, we're giving out the grand prize for this draw, right? 1,000 pesos worth of Bitcoin. So
Yeah.
okay, with suspense, drum roll. I don't have drum roll sound effects on my stream, so let's just go right to it. Let's see who is the lucky winner.
Ooh, Brent.
Okay, nice. Okay, congratulations, Brent Hipolito, for winning
Congrats.
the top prize, right? So, all of these prizes. So, thanks, guys. I hope that was a bit of fun. We are going to contact you right after the stream to coordinate how this is gonna go into your PDAX wallet. If you don't have PDAX accounts yet, then we can also help set that up for you. So congratulations to our 5 winners. We will try to bring in more of these like fun
Congrats.
games into the streams in the future. Thank you, Kyle and PDAX for sponsoring the giveaways for
Thanks.
tonight. Right? And hopefully I think everyone I really hope that you take away like 3 big things if I were to summarize, and then I'll leave Kyle to add a few things, right? Number one is cryptos and blockchain really do have utility, meaning there are real life use cases for cryptos and blockchain, right? I think some of us still believe that they're all theoretical. They live in like a fantasy world, but they're really more real than you think. And I hope Kyle's examples really do help bring that into a more tangible set of examples, right? So that's number one. Number two, when you really try to invest in cryptos, I hope you really take the time to do a Google search, right? Almost everything can be searched online. So really take the time to understand what it is, try to um, really understand what's the future use case possibilities are, so that you know the potential of it, right? To our point, there are a lot of vectors of what drives value on coins, but as you understand that, I personally have found this to be very powerful, that it enabled me to hodl on some of these coins, right? If I really believe in the future of that coin, it's a lot easier to hold on to those coins. And then lastly, they are still, while they can be very very good payouts, there are also days where they can really just wipe out your money, like what Kyle said as an example before, right? It can really multiply very quickly, especially if you also do futures and all of these leverage kinds of investing that you can actually have access to, right, in the right platform. So just make sure that you know what you're getting yourselves into, and you don't risk money that you don't that you cannot afford to lose, and you take care of your basic personal finance stuff like emergency funds, protection, and your savings and everything. Don't put everything in crypto, please. And try to hedge that as a viable asset, right? After you learn your piece. So Kyle, maybe those are my 3 big key takeaways from what was shared. So I leave you with maybe a final few comments to everyone who's interested in crypto and blockchain.
Sure. Thanks, Philip. Uh, I would say just two now. First one is if you're investing in crypto and you haven't yet, then just do so now. Just do so later tonight, tomorrow. Put a small amount, not yet all, like maybe 10, 20% of what you're planning to put first, just so you've dipped your feet in the water. Second is this whole blockchain space, right, and digital assets. Keep your mind at it. Maybe you're in a certain industry that may be a bit far off, but try to see, try to do the research on how it may be applicable for you as well, right? In the end, it's people, it's us who would drive progress. I know um, globally, it's mostly people in Europe and in the US and Singapore who's pushing, who's developing on blockchain. But hey, maybe there's a potential for us Filipinos to do something as well, to build something, right? So try to think of that, right? Try to think of how can you utilize what you know now to impact or to change your in the industry you're at, or how could you, or if you were to think of like that one digital asset that might be the most interesting, right? Or if it's not a Jollibee token, what would it be, kaya, right? And how can you get there? And then as those thoughts move around, I think it's going to be an exciting few years for the blockchain space.
Great. Thanks, Kyle. I think the sky is literally the limit, right? On this whole new game-changing technology, and as you said, right? Who knows? Maybe Jollibee will find themselves in the digitized chicken wings kind of space. But that just goes to show that the applications can be very very practical for everyone, and not just the select few who understands the technology in the technical sense or in the jargon sense, right? It can actually be real
Right.
life use cases that can happen later on, when the technology is further developed. So with that, thank you, Kyle, again for spending time with all of us and sharing what you have, what you learn on the space, and what you're still learning as you go, because it's really a very developing space, right? So thank you for the time.
Right.
And then at this point, I will let you go, and I hope to have you on the stream again when time permits, or if
For sure. No problem.
yeah. Great. Thanks, Kyle. I will now release you from the stream, and I'll just get
Thanks, Pete.
final reminders. Thank you. Thank you. Okay. So, everyone, thanks again for spending your Saturday evening with me. We've been doing this for 5 months now, so you haven't missed a month in 2021. I hope you guys are seeing value of these streams. If you have suggestions on future topics, feel free to comment them down. This stream will go up in YouTube as a replay almost immediately after. Give it a few minutes to load. But if you have suggestions on further topics, if we haven't talked about them in a previous stream, or you want to learn more about Bitcoin and crypto trading, for example, comment that in the comment section. And you can reach me via these links. You can go to my blog, or you can also email me at hello@thepesopro.com. And also, as always, please feel free to hit the like button if this was of value to you, and hit on subscribe if you want to see more of these kinds of videos and live streams. And then also, just as a last bit of note, if you can join us on Facebook, these are the different groups that will be helpful. So you have the Financial Literacy Facebook group, where we talk about personal finance in general, cryptos included. And there's also a new community that we're building on Facebook called the Heto community. This is more for helping others link small businesses to other opportunities. We also talk about homegrown businesses like PDAX on the platform. So if you want to join that as well, you can go to the link. And then also, there's a very big and helpful PDAX community on Facebook. So you can also join that. I think there's now close to some 20,000 members. So these three groups are good resources to find like-minded individuals. I am almost active in all of them. So I try to share and help guys, if you can, if you have questions or if you have anything to ask, there will be a lot of people who are willing to help. So with that, we end this stream. Thank you once again for staying all the way to the end, and please feel free to share this with friends, and I'll see you again on the next video or the next live stream. Thanks everyone. Stay safe.